Hello there, everyone. Welcome back to the YouTube channel and back again with another video. So, our pair for today's live analysis is the British pound versus the Australian dollar. So, in other words, the GBPAUD. So, without any further waste of time, let's get on with the analysis. So, I'm currently on the 4-hour time frame, and as usual, I switch to a line graph to identify my key levels, my highest high being there and my lowest low being here. So now that I have my highest highs and lows, it means that this is the playground of the market, right? So catering for my previous key levels would be these two key levels that are there that I'm seeing, my previous key levels. So as usual, I do have 4 key levels, and then switching back to candlesticks to identify the market structure or the direction of the market. Well, I'm seeing that we have a massive downtrend, and inside the downtrend we also have a downtrend right there. So as you can see, the market broke out, is currently retesting. So should we okay, let me see. Okay, yes. So now moving on to the hourly time frame. Now that I have whatever I need on the 4-hour time frame. On the hourly time frame, I do want to cater for a zone that I am seeing. So this is the zone that I am seeing, the hourly time frame zone that I'm seeing. And yeah, so now as you can see, the market, I think before I did have an entry around here. I had an entry exactly there, and the market, I think I had my stop loss around here. Yes, that's where I did have my stop loss, and my take profit was at the key level here. This key level right there was my take profit, and the risk to reward ratio, as you can see, is a good 1:3.52. So moving back to the hourly time frame, the market pushed to the upside. I was like, wow, so quick. And the market pushed back down. I was like, what? I was like, maybe the market is retesting, right? Okay, then it pushed up now with, properly. And then I was like, okay, let me step away from the chart and come back later. When I came back, it was around here. It was around my stop loss. I was like, what? And then I was like, you know what? Okay, I'll just stick to my setup and see what the market does. And then the market hit my stop loss and it took me out. So now coming back for a re-entry, I'm seeing that this is a downtrend that I'm seeing from this pair, which is not even an hourly time frame trend. It's a 15-minute time frame trend. Let me see. Yes, it's a 15-minute time frame trend, but it's worth it. It's worth catering for. So I do want to adjust my analysis for the trend right there. So yes, So now moving back to the hourly time frame, we have this retest right here, and the retest might either be a double, an increasing double bottom, or if you look closely, I am seeing a formation of an inverse head and shoulders, a reversal chart pattern, right? So this is what I'm seeing. Oh, there's also this large formation of the inverse head and shoulders. So yeah, those are the confirmations that I have for a buy position or a buy entry. So my buy entry would be possibly here by way of a stop order, and my stop loss would be there, exactly there, and my take profit would be at the key level right there. As you can see, it's above 1.5, which is a 1.59. I can either cater for that, or I can cater for that key level right there at the top as my take profit, right? So moving back to the hourly time frame, basically that's an example of a position, that's an example of how I would have my entry on this pair. But I know that it won't be perfect. But as I said, it's just an example. I'm not saying the market will react exactly the way I'm anticipating. So that's the setup that I have. As long as you see a breakout and a retest, cater for that buy. If the market breaks out the retest, have your cater for a buy stop with your stop loss possibly there, and your take profit at the nearest key level. The nearest key level, which is there at the top. As you can see, look at this. The risk to reward ratio has now changed to a 1:2.08. So as I said, it's an example. The market won't actually behave the way it does, we anticipating, but as long as our overall direction for the setup is correct, then the market will give us signals in terms of entry. So that's the setup that I have for this pair. So looking at it from the bigger picture, this is how it looks. I have an entry right there, and then if the market reaches the key level at the top, try to cater for the next key level, by simply either locking your profits here at this blue key level once the market reaches the black key level here, to see whether it's gonna continue, break out, retest this key level and continue, or is it gonna basically reverse from there. So that's your anticipation. Like there's a lot to take here. There's a lot to take. Look at this. So seeing that this is an uptrend, should we cater for the buy? So the market might possibly reverse here, or when it touches there, or even when it touches the trend line, give us a third touch and reverse, or it can break out, retest, continue to the upside to give us a touch, which would be a breakout and a retest on this trend line, and that would obviously signal for continuation of buy. So basically your overall take profit would be there at the top. Like this, it would be crazy if the market would behave exactly the same way I'm anticipating right here. And look at the risk to reward ratio. It's a 1:1. It's a 1:8.69. Wow, that's like 8.69 times your risk. So if you're risking, say for example, you are risking $100, right? You're risking $100. So it means that if the market hits the take profit there at the top, you would have made around $869. So wow, that would be great. So thank you for watching. If you enjoyed this video, hit that like. If you want more content, subscribe. And if you have any questions or suggestions or anything you have in your mind, leave them on the comments below. And without any further waste of time, thank you once again for investing your time into this video, and I will see you on the next one.